Check out shares of UnitedHealth down another 16% today to their lowest level in 4 years as the CEO steps down and the company suspends its forecast.
UnitedHealth stock just dropped another 18% in a single day, and now it's down nearly 40% year to date. From its highs in November, it's lost over half its market value. Is this just short-term panic or something deeper? In this video, I'll walk you through what just happened, why the market is reacting so strongly, and how I'm handling this as someone who actively manages a diversified portfolio. And spoiler, UNH only makes up 3% of it. Let's start with the facts. CEO Andrew Witty unexpectedly stepped down, citing personal reasons, and UnitedHealth also pulled its full year 2025 guidance. That double headline sent shockwaves through the market. Witty's resignation caught investors off guard, and when you combine that with uncertainty around medical costs, it's easy to see why the stock cratered. Taking the reins again, at least temporarily, is Stephen Hemsley, a familiar face and former CEO. That may provide short-term reassurance, but it's clear the market is pricing in risk. The real driver of this sell-off isn't just about leadership, it's about costs. UnitedHealth said it's seeing a faster than expected rise in healthcare activity among Medicare Advantage patients. Think of it this way. During COVID, many people put off treatments. Those treatments are now coming back with a vengeance, and they are expensive. The company's medical cost ratio, which tracks how much of each premium dollar is going into care, is rising. And when costs rise faster than revenue, margins shrink and earnings forecasts get cut. This isn't the first shock to UNH this year. Just 26 days ago, the stock dropped nearly 23% after disappointing Q1 earnings report. Revenue was up 10%, but profit margins were squeezed and the guidance was revised lower. So this latest news compounds an already difficult narrative. The stock closed the day at 311, down from a 52-week high of 625. That's a 50% drop. So what has this all meant for investors? Well, if you bought UNH 5 years ago, your $1,000 investment would be worth about $11.25 today. Not exactly a home run. The recent crash has wiped out years of gains. But here's the key question. Is the market overreacting? Or is this the beginning of something worse? And more importantly, what do you do if you already own it? Now, is this sell-off justified? Let's be clear. The issues are real. Medical costs are rising. Medicare Advantage, a big profit driver for UNH, is under pressure. And now there's executive uncertainty on top of that. So yes, there's reason for concern. But here's the other side. Revenue is still growing. The business isn't shrinking. This isn't a case of fraud or collapse. It's a case of elevated costs, likely cyclical. And leadership transition, that frankly happens in every major company at some point. Wall Street hates uncertainty, and this is a classic example of how the market often overreacts in the short term when faced with complexity. So what am I doing? Well, I'm holding, because UnitedHealth, despite everything, is still a world-class operator with massive scale, deep institutional knowledge, and a long track record of recovery. And crucially, it only makes up 3% of the diversified portfolio managed. That's by design. No single company should ever make or break your financial plan, and this is exactly why. Even after this drop, the overall portfolio is stable. That's the value of building with balance. You don't panic when one name goes south because the others help absorb the shock. This is something I talk about with clients all the time. People don't just pay a portfolio manager to chase returns. They pay to not have to make emotional decisions when volatility hits. Most retail investors would feel devastated by a 50% drop in one of their stocks. But when that stock is a 3% position in a well-constructed portfolio, it's manageable. You can zoom out, stay rational, and assess the bigger picture. And I still believe UNH is part of the bigger picture, even if it's going through a tough chapter. So what's next? There are a few things I'm keeping a close eye on. First, the next quarterly earnings report to see whether these cost trends are accelerating or stabilizing. Second, any signs of strategic shifts under Hemsley or a new permanent CEO. Third, updates on Medicare reimbursement rates or government policy that could help or hurt margins. This is a wait and watch moment, not a run for the exits one. And just for context, every portfolio has a weak link at some point. It's unavoidable. The key is to build it so that no single weak link drags down the whole thing. That's where diversification, asset allocation, and risk limits matter. Over the past 5 years, some of the best performing stocks have also had their worst days. The goal isn't to avoid volatility, it's to survive it without letting emotion dictate your decision. Now, if you want a breakdown of the full portfolio I manage, I'm happy to do that. I'll go over the core holdings, allocation decisions, and how I build around stability and growth. But I only want to do that if it's actually helpful. So if that's something you want to see, let me know in the comments. Just type portfolio and I'll take that as a signal to put together a video. And if you're holding UNH right now and wondering what to do, remember, one bad quarter doesn't undo a decade of quality. Stay calm, zoom out, and invest with structure. Thanks for watching. Hit the like and subscribe button if this helped bring some clarity to the chaos. We'll see you in the next video.